It's Monday, February 19th. You're watching The Market Comment by Mario Sajikiriakos. I'm Christina Marujos, and thank you for joining us here at XM.com. The U.S. economy continues to run hot as incoming data point to solid economic growth. The labor market remains tight, and inflation is not cooling down as quickly as investors had hoped. Last week's releases reaffirmed this narrative, with both consumer and producer prices increasing by more than expected in January. Faced with a resilient economy and persistently high inflation readings, traders have been forced to unwind bets of imminent Fed rate cuts. The timing of the first cut has been pushed out to June, while the market is now pricing in less than 4 cuts in total for this year. With markets shifting towards a higher-for-longer path for U.S. interest rates, the dollar has received a boost to become the best-performing major currency of this year. That said, the dollar's gains have not been too impressive. This may be due to the cheerful tone in stock market, which has dampened demand for safe haven assets. Hence, a correction in equities might be the missing ingredient for the dollar to shine brighter, especially now that foreign economies are slipping into technical recessions. Shares on Wall Street encountered some turbulence last week after the hot U.S. inflation prints, but the retreat was shallow and all the major indices remained very close to their record highs. The stock market has been incredibly resilient this year, but it's crucial to note that the rally is driven by a handful of tech companies with exposure to artificial intelligence, and that many older economy stocks have not participated. Hence, this is a two-speed market, with investors favoring businesses that are seen as recession-proof thanks to their artificial intelligence income streams, at the expense of more traditional shares and small caps that could suffer as the economic cycle turns. Nvidia has been at the tip of the spear, having gained more than 46% already this year. This elevates the importance of Nvidia's quarterly earnings, which will be released on Wednesday. Gold prices went for a wild ride last week. The precious metal fell sharply after the CPI prints, but managed to recover its losses in the subsequent days with some help from a softer U.S. dollar. Ongoing tensions in the Middle East may have added some fuel to gold through the safe haven channel, following some attacks against cargo ships in the Red Sea. This was today's market comment here at XM.com. Have a great week.